Okay, so here we are. Welcome everybody. I'm very much excited to be moderating an all-female panel, which in crypto is not that usual, but I'm very glad that female professionals are taking the role they deserve. And especially, they will be helping me in making this panel, let's say, not too boring, because the subject, institutional adoption, can be, well, boring for someone, but I think that we all appreciate how relevant institutional adoption is, has been, and especially is going to be. And so to introduce the panel, if you allow me, I will start with one by one with the first question so that you discover and realize their name, but also have a first feeling of their attitude to this topic. And so I will start with Chiara. And Chiara is Senior Sales Associate for Southern Europe at 21Shares. And 21Shares, I think we all know it. Well, we actually all know these companies. It's one of the world leaders in providing access to crypto through simple, easy-to-use products, both on-chain and off-chain. And, well, I mean, the topic of today, one of the main topics will be the ATF and ATPs. And so I will start, Chiara, asking you, how do issuers have been assessing the performance of spot ETFs so far? I mean, we are all aware of asset under management, volatility, but also the impact on liquidity of the underlying market, on the investor behavior, and so on and so forth. What has been so far, at least from your point of view?
Yes, well, so first of all, Bitcoin ETF saw a significant growth during the first 6 months of the year, and we saw large inflows of capital as well as Bitcoin price rose. If we have a look at the number, we can see that AUM passed from 28 billion on the day of the launch, the 11th January, to 55 billion nowadays. It means 96% of increase. And during the same period, Bitcoin price rose by 25%. But also the volatility has increased, because in 2023 it was around 44.7, and nowadays volatility is 53.9. It has increased because of key factors like the first launch of ETF spot on Bitcoin, the launch of ETF spot on Ethereum, and the halving. And in general, investors consider this asset class very volatile, and they still hesitate to invest in Bitcoin because for them it's volatile. And yes, indeed, it's more volatile than many other asset classes. But if we have a look to the historical data, we can see that the extreme spike in volatility has decreased and are becoming lower and lower every year. It means that the sector is starting to become more mature. And the launch of ETF spot on Bitcoin has also had an impact on the liquidity. On one end, the creation-redemption process typical of the ETF has increased the trading volume. And on the other end, the launch of the ETF spot on Bitcoin by the well-known key players of the industry, attracted by high performance, has boosted the asset class reputation, and also it renewed the trust in Bitcoin. Therefore, new investors have entered into the market, increasing the asset class liquidity. But I would like to highlight that we have spoken a lot about this launch of the ETF spot on Bitcoin in USA, but this kind of product is here in Europe, has been here in Europe since 2019. And the ETPs on cryptocurrency here in Europe have the same structure of the ETF spot on Bitcoin in USA. So for the first time, Europe is first in advanced,
running
instead
ahead.
USA is lagging behind.
Okay, thank you. And next in line is Kat. Kat is Director of Business Development at Hashnote. Hashnote being a regulated asset manager, providing clients with customizable digital and real-world asset exposure. Kat, I mean, you have been around quite a while. How have things changed in crypto space? I mean, how has things changed in the institutional landscape? How it was 4 or 2 years ago compared to today?
Yeah, it's an absolute pleasure to be here. Ciao a tutti. Let me introduce myself on Hashnote, and I'll tell you a little bit about the evolution of digital assets adoption in the institutional space. So my name is Kat, and I look after European business development at Hashnote. We are an on-chain asset manager positioned at the intersection of crypto and TradFi. We are a DRW company incubated by Cumberland Labs, and we offer a variety of products from passive exposure to crypto to treasury management solutions and various yield-bearing and hedging instruments. Our flagship product is called USYC, which is a tokenized money market fund designed to be a collateral, yield-bearing collateral token for trading, lending, and borrowing. And we have already surpassed $250 million in AUM in under 18 months since inception. My roles before Hashnote include head of product at Copper and business development at Gemini, which is a regulated crypto exchange and custodian. So I first started working with digital assets in professional capacity back in 2017, whilst I was working for a Swiss bank, and we launched one of the first crypto tracker certificates aimed to enable access to digital assets to institutional investors. And back in 2017, we realized that it was an operational nightmare because the infrastructure was simply not there. The exchanges back then were very much created by crypto enthusiasts for other crypto enthusiasts, and they were not suitable for institutional trading. Well, fast forward a few years, I can tell you that definitely the infrastructure has finally arrived. Not only we see a lot of progress in terms of custody solutions, both on the MPC and the HSM side, we also see huge progress that the exchanges have made. So some of the oldest spot exchanges like Coinbase and Kraken have also launched derivative products. And some of the oldest and the biggest derivatives exchanges have improved their tech in terms of their margin engine. You now can do like cross-collateral, a lot of innovation in this space. I'd like to highlight that 4 years ago, we didn't really have any OMS systems, any smart order routers. Now we have brilliant solutions, the likes of Talos and CoinRoutes, which now enable you to have very simple and smooth execution and get data from multiple venues in one API endpoint. It is an extremely powerful tool. And basically, the infrastructure is now here, and it means that institutions are more likely to trade crypto. Second thing I'd like to mention is that the adoption of new legislation across the globe and clarity around this legislation, and also the launch of the ETFs have finally legitimized crypto as a great portfolio diversification tool for traditional investors. About 1 to 5% of the traditional portfolio allocations now go to crypto. And that is essentially showing you that we're diverging from the traditional 40-60 fixed income equities allocation into a more diversified portfolio. And crypto has finally decoupled from the tech stocks. So you are having a better risk return in your portfolio just overall. And finally, I would say the last thing that we're seeing in terms of evolution in this institutional space is a lot of talk about tokenization, real-world assets, and in my opinion, there is some form of a race between private blockchains and public blockchains. So HSBC, for example, have launched their own blockchain, and they're issue and tokenized products on the Orion blockchain. At the same time, JP Morgan is working on Onyx. At the same time, JP Morgan and HSBC products they are quite successful, and we're seeing companies innovating in-house, trying to build blockchain solutions. But at the same time, you have Biddle by BlackRock and the Franklin Templeton tokenized money market funds. They have all been launched on public blockchains, so Ethereum, etc. So 3 things. The infrastructure is here. So now institutions don't have to invest through ETFs or buy some exposure to crypto through CME. You can now invest directly. And I've been speaking to Banca Sella here. I heard that you guys are experimenting with Fireblocks. That's great. When we have the most traditional institutions working with a crypto infrastructure, it means that we're going to see more adoption. Secondly, as I mentioned, the ETFs are here, and then thirdly, it is all of the talks about tokenization.
Great, great. And now it's the turn for Lisa, Associate Director at CoinShares, another ETP issuers, and one of the leaders in setting new standards for institutional excellence in the digital asset space. So Lisa, from your privileged point of view, would you confirm, I have the impression that institutional players are basically monitoring each other, especially in Europe, figuring out how to move forward. And from your point of view, who is ahead? Who is braver? Who is more conservative?
Great question, because every time I go to a client, one of the first questions I receive is, what my competitors are doing. So just to tell you more about what I do at CoinShares, CoinShares is managing around 5 billions. Just to let you know, when in 2015 Bitcoin was $200, we made purchasable ETP on the first stock exchange, which was Stockholm at the time. Now we are doing much more innovative products, physical, and my job is to go to clients like institutional, family offices, and so on, and to convince them why they should include a certain percentage in a portfolio or how to advise a client. So in Switzerland, I travel a lot, right? I go to Geneva, I go to Lugano, and Switzerland, and I think Chiara can confirm it, regulation have been so friendly. In 2018, they already allowed to trade exchange trade products. And as a consequence, we have 4.4 billion of assets under management, right? What's happening that asset managers, private banks, they all feel comfortable to include this asset class. And it's actually not a surprise that some of my clients are already including from 2 to 6% in their portfolios. Why? Because regulations, education, and risk approach has been there. Italy. So Lugano is 76 kilometers far from Milano, right? So I take a train, I visit same clients, totally different story. A lot of institutions don't even understand what is today an ETP. A lot of clients don't understand still what's the technology behind Bitcoin and Ethereum, for instance. And Borsa Italiana, it's not even allowing to trade exchange trade products. So obviously, because of console, by the way, so obviously banks and clients and whoever are not feeling comfortable to trade this crypto yet, right? So to answer your question, Switzerland is braver, Italy is conservative, but this gap, it's because of education, lack of regulation, and different mindset.
Thank you, Lisa. And it's finally my pleasure to introduce Michela, Institutional Business Developer Manager at Binance, one of the largest cryptocurrency exchange by trading volume. And when I mean larger, well, actually, Binance has just surpassed $100 trillion in trading. Quite an impressive achievement, Michela, isn't it?
Yeah. We were expecting to be honest, we were expecting this like a month ago, and when it actually happened, we were all like staring on the stage.
Oh, so you mean
like
you're slow?
yeah.
You love the company to go faster.
We were doing the countdown all together in the office, and it was quite marvelous to see. Just a quick intro about ourselves. We're Binance VIP and Institutional, which is the corporate arm of Binance. Many of you know Binance as the biggest exchange for retail trading volume, but we're also the biggest exchange in terms of institutional trading volume. Our team is proud to say we are the business development team in the world that manages the biggest volume in the digital asset space at the moment. We work with hedge funds, asset managers, prop desk, family offices, market makers. And this panel is going to be very, very insightful as we're going to just dive deeper into how this adoption has taken place. For Binance, as you said, we're very, very proud to cross the 100 trillion all-time high volume in our exchange. And we're also very proud for all the licenses and progress we have made lately. We have just secured the 19th license in India, one of the most complex jurisdictions out there. In Europe, we are the biggest and also more licensed exchange, having over 5 licenses. So yeah, looking forward for this panel and looking forward to connect with you all during the conference.
Yeah, and of course now we will go in a way deeper on topics that might have been already touched upon, and so I think that ATPs and ATFs deserve to be the topic we start with. And so, Kat, on the 10th of January, ETFs have been approved in the United States by the Security Exchange Commission, and that is definitely an historical milestone. Do you agree how historical it's been, and what has marked as a change, and what does that mean worldwide?
Well, it's an absolute victory for crypto, and we've seen both the Bitcoin and Ethereum ETFs approved this year. So it is indeed a historical milestone.
It took 10 years. 10 years since the first application.
Nevertheless, we scored an enormous victory as an asset class. And by this time, we have more than $50 billion allocated into the Bitcoin ETFs alone. And the Ethereum ETF, on the first day of launch, traded in a volume of more than $1 billion. Of course, the Ethereum ETF then was showing a little bit of underperformance, but in my opinion, that's macro, that's the timing, because we entered the summer lull. And nevertheless, I see that this, as I mentioned, has legitimized crypto as a brilliant asset for portfolio diversification for institutions. I'd like to mention a very interesting side effect that I've noticed. The previous bull run was very much dominated by the meme coin mania from the retail space. However, this sort of bull run is very much driven by institutional inflows. I mean, Millennium, one of the biggest alternative asset managers, is holding more than 2 billion allocation into BTC ETFs alone. So we're seeing huge institutional inflows, but we're not seeing the retail coming back. Hence, I would say that there is this huge underperformance of all of the altcoins and the dominance of Bitcoin, Ethereum, and the assets which are the top 20 by market cap.
Okay, and Lisa, I mean, Chiara already touched upon ATPs, European ATPs, namely being launched well before ATFs, but how are these different issuers perceived? How are different these products from one another, and what is the difference for a European investor?
So ETP is an investment vehicle that is tracking either a stock, either commodity, or crypto and basket. But there is one thing that investors forget. ETPs are an umbrella of ETFs, ETCs, and ETNs. So what is happening to crypto, right? Why it's an ETP? Because it cannot go in Europe under ETF, because it's not a fund, it's not diversified by law. It's also not an ETN because it's not a NOT. So it's kind of an ETC because, right, it should be a commodity, but can we really call crypto commodity? No, so we call it an ETP. But now, what's in common between ETP and ETF? They both trade on exchange, right? They both track a crypto, and they both have 100% backed by crypto. But the real difference, actually, it's interesting because one is under US law, so UCITS, right? The other one is under European law, and it's not a UCITS. Also, one is the trade are settled in crypto, which is an ETP, and ETF is settled in cash, which is making less cost effective and less secure, okay? And last but not least, actually in Italy, I will say it's such a big difference to buy today an ETP and ETF because an ETP by Italian law, it's compensating, how do you say, minus valenza?
Yeah, plus and minus,
Yes.
capital gain and capital loss.
Yeah, here you are. And also, from taxation point of view, it's less taxed. So definitely in ETP, it's still a winner product here in Europe, while in ETF, I will say it's more US friendly for sure. And yes, also, ETF today, you can only buy Bitcoin and Ethereum in US. Here you can buy Solana, you can get the staking reward back, you can buy a basket, you can diversify. So there is still like a big of difference between the two products.
Thank you. Chiara, how have the investors responded to introduction of ETFs? Have you seen some change in their capital allocation pattern? And especially, has there been a difference
Bitcoin?
between...
Sorry, I've not understood.
Sorry?
About the adoption of Bitcoin or
No,
Ethereum?
about the adoption of ETFs in general. Has there been a change in the capital allocation patterns? And do you feel there has been a different reception for the Bitcoin ETF or the Ethereum, the Ether ETF, or how it's going to be maybe next Solana ETF?
Thank you for the question. It's very wide and interesting. And I would like to start from what Lisa said, because she said that in Italy is a little bit more conservative, and it's true. But anyways, as 21 shares, we have noticed that there is a great demand for this kind of products also here in Italy. In fact, at 21 shares, we try to launch as many cryptocurrencies, ETPs as possible, also on request or from some of our institutional clients. If we have a platform of over 40 products, it means that there is a great demand for this kind of product, because the institutional clients have started to see this asset class as a new and emerging asset class. But for sure, the asset class is very new, so each client, each investor has its own specific strategy in diversifying the portfolio. And in general, during the discussions with our clients, we have noticed that the most important point for them is the strong lack of correlation with the major allocation in stocks and bonds. Obviously, there has been the psychological effect of the launch of ETF spot on Bitcoin USA, because many European investors have renewed the confidence and the trust in this asset class since January onwards. But in general, I think that we can do a comparison between the adoption of cryptocurrencies from institutional investors and the adoption of the personal computer. In 1990, the mass adoption of a personal computer happened not because of the computer by itself, but because of Windows. And we think that the same thing can happen also about cryptocurrency, because cryptocurrencies in general are not very easy. It's quite complicated to buy and sell them. And the ETP can be the right instrument to get access to them. So, in my humble opinion, ETPs are to cryptocurrencies as Windows is to personal computer. And what else about Ethereum? I think that Ethereum, as we know, is quite young. It was born in 2014, and it needs time to grow and to be understood by investors. Nowadays, Bitcoin is more popular than Ethereum, for sure, if we have a look at the data. But in general, Bitcoin is more popular now than 5 years ago. So it just means that Ethereum needs time to grow and to be understood. And about the institutional investor, I think that they need, as Lisa said, to be educated and informed, because at this level, they can't use about cryptocurrencies the same strategies that they usually use for stocks. And in portfolio, in clients' portfolio, the cryptocurrency account only for 5% of the allocation. And generally speaking, clients limit themselves into a diversification in Bitcoin as main strategy. On the other hand, there are other investors who are more advanced and they are able to build a cryptocurrency portfolio, but in that case they are able to diversify into many different cryptocurrency, but they develop a personal proprietary strategy that they don't want to share in order to protect their know-how.
Thank you. And Michela, from Binance's point of view, since the launch of ETFs, has there been any pressure, increase or decrease, maybe in the spot of derivatives market?
There has been an increase, and the reason for that increase is because when that door gets open, many of the TradFi funds are starting to migrate to crypto. So it has been a positive impact in both the spot and derivatives because of this. Many of the TradFi funds that we thought they would never touch the digital asset space, now they are trading with us. And that was thanks to many doors in those derivative products getting created. I do believe that the more vehicles that are being enabled, the more volume we will see, as my colleagues have already mentioned. We have seen a tremendous growth in spot and derivatives markets in Binance globally, and this is thanks to the newest vehicles that were brought to the market, and this is just the beginning.
So all the players have been benefiting from the launch of ETFs.
Correct. This is just not one single, I would say, player game. We're all getting benefit because of this.
Well, thank you. And starting from ETFs and ATPs has been just one evidence of how relevant is the role of regulation and to get regulators' approval. And Kat, what you perceive the difference of US versus Europe, and especially is in Europe the MiCA regulation helping or slowing down adoption?
Well, in 2022, the collapse of FTX wiped out millions and millions of dollars of market cap. Some of the most interesting and sophisticated players in the industry got absolutely wrecked. And obviously, that accelerated the adoption of regulation, both in the US and Europe. I would say that it's extremely important that the compliance departments in all of the crypto firms work together with regulators, because we are trying to achieve the longevity and the stability of crypto as an industry, and at the same time we're trying to protect the end investors. So we're trying to help both, and I would say that MiCA is harmonizing the regulation between different EU member states, and we're seeing that it is actually helping in adoption of the asset class because, again, as I mentioned, it is legitimizing crypto.
Thank you. We have seen the relation between players and the crypto players and regulators changing during the last few years. Michela, how relevant is this relation for business development? How crucial is the relation with the regulators?
It has never been more crucial, and now, as you said, Kat, because of Micah, it's even more crucial to work to create the best framework. And not because of the institutions, it's more for the users. We need to make that transition to those new frameworks as smooth as possible. So we work with them daily and weekly to make sure when we implement those changes, is friendly to the user, and at the same time, as I said, it doesn't impact their perception of the crypto market. It can be a little bit dense and heavy to digest at first, but it's our work with a regulator that makes things a little bit easier. I think in Europe specifically, and in every nation, if we break it down, localization has never been so important. In terms of seeing Europe as a whole, localization, as my colleague said here, like it's not only about Italy, it's about how do you see MiCA being implemented in Spain, in Italy, in France, and to make sure that the end user feels that there is a way forward and not a block. And I do think, and again, that all of us together here are working for that. And also our business relationships are a clear example. So what I mean by business relationships is not just Binance and the regulator, it's Binance and the rest of the players in the ecosystem that work with the user to make sure that the interaction between our products is seamless. So yeah, I would say in the next few months, MiCA is gonna take the first page, is going to be taking the coverage. And you said, Lisa, education is going to be paramount. The more we invest in that, the better. I have calls with my clients every day, and our first topic is literally just educate them on what is happening now, what can potentially happen in the future, and how can they get ready for that. And the responsibilities in our court, on the firms that are sitting in this panel today. It's our responsibility to educate the user, and we're both retail and institutional clients, and we put extreme efforts on making it happen. It's not only about selling, it's not only about our products, it's also about them understanding how they can get ready for the frameworks ahead. The more they can get ready now, the better they will be able to trade and interact with those products in the future.
Is it working? Yeah, I'll touch upon this on this point later, but we have to understand that for the regulators, it's a very delicate balance that they have to strike between making sure that we're protecting the consumers, the investors, and at the same time, we are still encouraging innovation in this space.
Yeah, I mean, I've been known to joke about the fact that most of the regulated asset management in Europe has been not helping crypto adoption, basically shutting down investors from the most, the best performing asset class of the last year, the last 3 years, the last 5 years, the last decade. So surely not a good service. Anyway, I mean, Lisa has already been touching on the Italy versus Switzerland, but Chiara, would you elaborate further? What is the situation in Italy? How is it changing from the regulation and regulators' point of view?
Well, it could be better, but we are at 21 Shares. We are working on it, and we did the first application to Borsa Italiana 5 years ago, so a long time ago. Meanwhile, we were able to launch our ETPs on the rest of the major stock exchanges like Euronext Paris, Amsterdam, Xetra, GetEx, and also in Dubai and in Australia. I think we are now at a good point. I can't say because of our internal policy too much, but I think that now we are getting round, and probably it will come Not soon, but it will come.
But let's put it this way. I mean, the Security Exchange Commission took 10 years to approve the ATFs. Maybe Consub will take some way less to approve ATPs in Italy.
I know. In my opinion, it's a problem of education because, first of all, governments, central banks, and the institution have to be educated. They have to understand what blockchain is, what Bitcoin is. We need to spread a lot of education altogether. This is the most important point.
We have to try it. I mean, ETHMilan is one of the best events from the point of view of education, and
yes,
so
it's a
definitely.
step.
And I see in the audience, I can recognize quite a few former colleagues from the banking system, and even some regulators in disguise. So probably they are paying the attention to what is going on. Lisa, you have been comparing Switzerland to Italy, but let's try to talk on a larger or the wider approach. What about the comparing Switzerland to European Union or even UK? Who is more advanced or more promising? I mean, we have heard the UK saying, oh, we want to become the crypto capital, but then not that much actually following on those declarations.
No, UK is a joke, literally, because they say that, and then they're like, oh, yes, we're going to list this ETPs on our exchange, but only professional clients can buy it and only under client advisory approach. So how can they become a crypto capital if they do that? And obviously, investors have been limiting themselves of buying it because they don't feel really that regulation have been so much friendly with them. And as I said, and actually I have a great friend here from Lugano. He's working in family office. He can confirm how Lugano it's actually became a crypto-friendly city. In Lugano, literally the lifestyle is life-changing because you can go today in any shop and you can purchase any item like food. You can go to McDonald's, you can pay by crypto with a wallet, you can survive with a wallet. Can you imagine that? And again, as I said, in 2018, they already listed actually one of the first ETPs from 21 shares. They have done an amazing job. And remember that Switzerland has been always conservative as a country, and they still took the risk, and now we see the results.
So Switzerland is the leader, Europe is following, and UK is not clear yet. Okay. Well, I mean, adoption by institutional has many challenges, but also catalysts. And so, Michela, what are, in your opinion, the main challenges and limitations that have been hindering institutional adoption of crypto so far? Or on the other side, what key factors can we look forward to as driving institutional adoption in the last quarter of this year or next year?
Excellent question. I'm going to try to be super specific with the answer. Instead of just giving a general overview, we need to divide the challenges in two. And many put it together, but the lenses are completely different for crypto funds than for TradFi native funds. There are challenges that are unique for the TradFi wealth management that are jumping in the space, and there are challenges that are unique for the crypto funds that want to perhaps start ramping up their volumes. For TradFi, let's start with that. I think one of the main challenges are the operation frictions. What do I mean by that? Again, it's capital expensive at the moment just to onboard from fiat to crypto. It's also very not very seamless to integrate custodian with some exchanges. It's also at some point very, very expensive to do the end of accounting period for those funds and to work in combination with several of the big fours. And again, some of the major trading firms. So I think that in general, the tech stack, there is still a lot of friction when they're trying to integrate with crypto. But, and I recall my colleague Kat mentioning, like, all of us of the firms here today were making a strong effort and investment in infrastructure. Our the main resources, even in our exchange, are going to improve the infrastructure to make sure that the friction just goes down. One of the solutions we put more effort on was portfolio margining, for example, that is allowing those TradFi funds and crypto funds to combine or merge their wallets, their spot and futures wallets. So in terms of, instead of just withdrawing from spot and then transfer that to future, now portfolio margining is a solution that allows you to merge the wallets and allow you to trade using the collateral of those wallets. Again, that's a solution to reduce the friction. And we need more of those because that's what TradFi needs. Now, on the side of crypto funds, they are also facing challenges when they want to ramp up. Because let's face it, there are crypto funds that already know what their strategy is, but then when they want to ramp up and when they want to start, let's say, expanding through their tech stack, through their ecosystem, I think one of the main challenges for them to grow is actually compliance, and mostly this year, because of all the frameworks that are in place, it has been really, really hard for them to keep up to pace. And let's face it, some of those crypto funds that are emerging, they don't have the millions in their treasury to invest in compliance. We do understand it. I mean, it's really, really hard for them to keep up, and there needs to be an investment on that. So I do believe that the main challenges for crypto funds is actually keep up with the frameworks that are in place. But, and again, as a solution, Binance and other of the big exchanges, what we're doing is just trying to educate them as much as in terms of how your structure needs to take place, what is the right AML controls you need to have, the right investments you need to do in this, in transaction monitoring. The majority of the crypto firms, even here today that I was speaking with them, like, they don't have a transaction monitoring solution. Even if you're a hedge fund in the crypto space, you need a transaction monitoring solution for your investors, for your counterparties. You cannot not have them. Oh, Michela, but we don't need the AML control at this place. You need them. In fact, it's going to be paramount to have them. Otherwise, exchanges in a few months won't onboard you. So those are some of the challenges that they believe that that they don't need at this point. But actually, it's paramount. And if we do overcome this challenge, they will be able to ramp up successfully in the next few months. They will be able to work with, not only with Binance, but with also many of the most traditional and conservative firms in the space, many of the banks as well, because we have great relationship with the banks across Europe. And one marvelous thing I'm seeing in terms of patterns is that our onboarding is now very equivalent to the banking sector. So we're seeing a standardization of onboardings. That means that if you comply with one entity, you will probably comply and also on board with other entities. And that standardization is super positive for the industry. Now, answering the question on what is pushing the most institutional adoption this year, again, my colleagues have very well go through the ETFs, and I'm standing in the shoulders of giants here. All your companies have done a marvelous work. But in terms of what is going to impact the most institutional volume in the next few months is definitely macros. So zoom out, and if you see the fundamentals, that's going to do the job in Q4, Q1, 2025. What I mean by that, if you see, again, if you monitor closely the relationship between M2, global liquidity, and the capitalization of the crypto market, they are highly correlated. The Fed has just started in the era of easing, the first rate cut since COVID. This is definitely going to impact the available liquidity in the system. This is going to be correlated by intermarket correlations to digital assets. And also, if you see not only the Fed, because it's not just a one-time player dynamics, but if you also see, for example, the Central Bank of China and their plans to inject more liquidity in the next 2 to 3 months, you're going to see the amount of capital flow that is about to jump into risk-on assets like crypto. Don't see crypto as the only asset that is going to get benefited by this, by the way. Just zoom out, see all the risk-on assets that are in the picture, and we're going to see quite an interesting correlation. Again, just to anyone that wants to know what is happening, what is going to happen, just zoom out, see the macros, closely monitor the interest rates, closely monitor M2, and you're going to see a very, very interesting correlation there. Anything that I'm saying is not financial advice, just a small disclaimer.
Usual disclaimers apply.
Usual disclaimer.
Okay. Lisa, with Michela, we have touched the issues of, let's say, challenges and catalysts. But I'm also wondering, from the point of view of your clients, what are they asking? What are their needs? What are their demands? What is their awareness of what they are needing, in a way? Because that is kind of, a subjective point of view, while Michela was touching, in a way, more on an objective point of view. And how is your firm adapting to their request or setting up to answer their demands?
Yeah, so investors need more security about this asset class. First of all, they want to hear that there is a bit less volatility. And indeed, it's true. If you think 10 years ago, volatility was 250% in Bitcoin. Today, it's 50%. So the next question from investors is how we reduce the volatility, for instance. And the answer to the question is quite simple. You need to include small percentage in your portfolio, and you need to rebalance regularly. For instance, we always recommend a 4%, and there is a specific reasons for that. Because if you monitor a 40-60 portfolio from 2017, you do see that the return are around 9.6%, drawdown is maximum drawdown around 22%, volatility around 9%, and so on, but Sharpe ratio is 0.50%. If you include 4% and you rebalance it quarterly, not only you double the returns, but the drawdown goes to 12%, volatility increase maybe by 100 basis points, but Sharpe ratio is go above 1. And whoever here is a portfolio manager, you know how it's important to be above 1. So I will say that we need to calm down investors with volatility discussion, and last but not least, also counterparty risk. There's a lot of questions, I think also Chiara gets, what happens if CoinShares default, or Binance default, or 21, or Hashnote, or whoever? And the answer is very simple. In ETPs, it's a bankruptcy remote structure, because if something happens, there is a legal trustee, which is outside of the company, who has delegation to sell the assets and redeem investors in cash, for instance, right? And also, there is a custodian, and the custodian today, for example, CoinMino, which is a joint venture between Nomura, CoinShares, and Ledger that we use, is very secure. Even UK government is using it for money laundering actually today. And last but not least, there is also segregation in assets. So when investors will understand that it's not that volatile and it's a bankruptcy remote structure, when they use, for example, ETP, things are gonna go better.
Kat, what about trends and innovations in crypto? I mean, especially compared to traditional finance, TradFi asset classes.
Yeah, so I'd like to build on what has been mentioned by Michela and Lisa. So I'd like to talk a little bit about the two big challenges that all of the participants in this ecosystem encounter, and that is the counterparty risk and the capital efficiency and capital mobility that you are trying to balance. So back in 2020, whilst I was working at Copper, the crypto custodian, we realized that it is extremely capital intensive to pre-fund on every venue that you trade with, and you're running counterparty risk with all of the exchanges that you work with. So we realized that there needs to be some sort of solution where you can keep your funds in custody and then trade more effectively on multiple exchanges, so you'll be able to deploy capital effectively at multiple venues, so you can do cross-exchange arbitrage and other strategies. So that's how Clearloop was born. So I was working on the first iteration of Clearloop, integrating Deribit, Bitfinex, and a couple of other exchanges. So that was just one of the first solutions to reduce counterparty risk, and it was all about off-exchange settlement. Fast forward 4 years, there are lots of off-exchange settlement solutions. We know that Binance has a solution with their own custodian called Sifu. Kamino are doing some work with OKX. Zodia have the custody and the Zodia market side. Literally name any custodian in this space, they are all working on some form of off-exchange settlement infrastructure. Then a very interesting solution is, of course, the tri-party. And I would say that it is psychologically probably more appealing to the TradFi firms. So I know that Binance is very much a pioneer in the tri-party space, and the Signum Bank in Switzerland are doing a lot of work in that direction as well. I would say that they're paving the way. So the idea is that you would have your fiat staying in a bank account somewhere, and then you would use that collateral as sort of, you pledge that collateral to trade various instruments at different exchanges, etc. So all of this is great. So it seems like we have pretty much solved the counterparty risk. However, the biggest challenge, in my opinion, at this stage is collateral efficiency and collateral mobility. Stablecoins, for years, have been extremely useful as a method of transport. So stablecoins are very effective. You've seen explosive growth in USDC, USDT, and other stablecoins. However, I've been hearing this from my institutional clients that they're sort of really tired of the fact that all of these stablecoins, they're non-yield-bearing collateral assets. So what everybody was asking for is a universal yield-bearing collateral token, which is designed for interoperability between different blockchains and is accepted at the majority of trading venues, but is also used as a collateral for lending and borrowing across both centralized venues and all of the decentralized world. And what we've done with USYC, our product, is precisely that. So we created a tokenized money market fund, which is designed as a yield-bearing collateral. We're shortly coming to Deribit as a way to post your collateral and actually earn some yield on it. And we will be speaking with the rest of the ecosystem, and we're partnering up with the custodians. So we're also joining forces with Copper and the Clearloop and all the exchanges in Clearloop. And also we would be very excited to, of course, work with Binance, both in the tri-party setup with banks, but also in the off-exchange settlement setup. I'd like to mention that there are lots of solutions in the market who are offering tokenized money market funds. BlackRock Biddle, for example. But those solutions, they're very much designed as savings vehicle. What we offer instead is a yield-bearing collateral token, which is increasing in value every day. So you're having the most liquid and the most transparent device to be accepted across the ecosystem. So we see ourselves as an alternative to stablecoins, while stablecoins are at rest. And we want to partner up with as many stablecoins as possible. So currently we offer only the US money market fund, but we're very excited about the European market. We're very curious about who are going to be the winners in the stablecoin space in Europe, and would love to partner with all of these companies. And it seems like at least from my perspective, it seems that the stablecoin market in Europe, the Euro stables, it's kind of still fragmented. It's not very clear to me who are going to be the winners and the losers in this space. So I'm here in Milan to do this research effectively. So I'm going to Zug. Next week, I'm going to Liechtenstein just to do a little bit of this research. So, as I mentioned, we've pretty much solved the counterparty risk problem. Now it's the issue around capital efficiency and capital mobility that we're trying to solve as an industry.
Thank you. Chiara, what is the emerging trends and investment vehicles and how the appetite of asset manager for this vehicle is changing? I mean, you know, we already touched on UCITS products and non-UCITS products. What is your view on that?
Yes, as Lisa mentioned, ETP is the category, the big category. Inside we can find ETF, ETN, and ETC. ETP on cryptocurrency is not an ETF because it's not compliant to the UCITS regulation. In Europe, we have the UCITS regulation, and if you want to have a fund, you need at least 20 cryptocurrencies which are liquid. At the moment, it's impossible to have a real fund with at least 20 liquid cryptocurrencies. And I hope that maybe our company at 21Shares, we will able soon to build this kind of product of UCITS fund. And you mentioned the asset managers. For example, in Italy, asset managers aren't able to buy our ETPs because they can only buy ETFs. They would like, we have many discussions with asset managers. They find that this new asset class very interesting. They would like to include it, but for them it's not possible at the moment because they would need to change their prospectus. So we need only time, but I think we will reach the UCITS fund on cryptos.
Okay. And none of you have touched on the US election. Now, I know this is a slippery slope. I don't want to embarrass anyone, but surely you see the outcome of the next election as a challenge or a catalyst. I don't want to force, of course, to express a preference. That will be unfair. But let's say, do you think the elections are going to be relevant, neutral, or irrelevant? I will ask all the four of you just for relevant, neutral, irrelevant.
Can I start?
Let's start
relevant, very, very relevant.
Okay, Kat?
Well, I obviously don't want the adoption of the asset class and the regulation around the asset class to be on sort of kind of one party line or the other party line. I would say it's it should be a neutral story. However, let me tell you how crypto is being used as an asset class when we're seeing some volatility in the markets just overall. The thing is that the traditional markets, they trade sort of on weekdays at certain hours, but crypto trades 24/7. So this summer, when we had the meltdown around the Asia markets, and we saw like a huge sort of slide down in equities, fixed income, sort of the course of events went like sort of from Wednesday, you started seeing some liquidations, Wednesday, Thursday, Friday, people get margin called in most of their portfolio allocations in different asset classes. And you think it's kind of, that's it, right? Friday night, the markets are closed. Well, guess what happens? So Saturday and Sunday, you have a huge sell-off in crypto. Because as you've been margin called in all of your other investments, you're trying to get some cash, and you're trying to cover some of your positions, and it's now time to sell what you can sell.
So in a way, brace yourself for the electoral weekend in November. But
so it doesn't
relevant,
matter.
Neutral.
So let me mention this.
Yeah.
So it doesn't matter whether the outcome of the election is going to be bullish or bearish for US equities or European equities or FX. It doesn't matter. What we're going to see is that crypto will follow in the hours when the markets are not trading, because crypto trades 24/7, and we're going to see a delayed action. And in the Monday, when there is going to be an opening of the markets, we're going to see crypto slowly sort of following. So I would say whatever the market action is, crypto will follow, but sort of with a delay.
Yeah, but you're pointing to a very good point. I mean, as a matter of fact, during the weekends, hedge funds are taking risk-off or risk-on position through crypto. But So just a word, relevant, neutral, or irrelevant?
For sure, relevant.
Relevant?
We don't do forecast, but
No, it's not a forecast, just if it is relevant or not.
relevant. And
Relevant.
I would say, if I might do a quick note, markets are efficient at the end, right? Which means that information will be priced in. I think what portfolio managers are asking themselves right now, whether that's going to be priced in before that weekend, before November, or not, because that's where the question lies. Is it going to be priced in the price, or is not? Definitely, again, as one of the major economies in the world, it will have a sort of correlation with digital assets. Do not act based on what we like to call, of cognitive biases, in the terms of you don't want to assume something will happen, just evaluate all their scenarios. I do know that there are a few analysts on Twitter and analysts in general just making projections based on what can happen or not. Just make your research made on any scenario possible, and that will give you a clear overview idea of what's ahead.
Ferdinando, do you like uncertainty or do you hate uncertainty?
I like uncertainty. I think that uncertainty is not a challenge, it's an opportunity because it allows braver people to discover trends early. As a matter of fact, I think that in a way the US election, well, of course, if Republicans will win, that was bullish for crypto. But even if Democrats will win, that is not bearish at all, because it will be probably the continuation of the Democratic administration, probably even better than before. So I don't think there are signals for to be worried. There are opportunities, but there are no worries.
The way I would answer this question is that right now we're in the period of uncertainty, and no matter what the outcome is going to be, there is going to be more certainty after the November events, and more certainty means more clarity, which is ultimately bullish, but that is just my personal view.
Yeah, of course. So volatility until the election, and then maybe some kind of market trend, we'll see. And
maybe we have PMs in the room who can comment on this.
And so let's move to another topic. As an entrepreneur myself with a custodian solution, I'm very keen on the blending of the best part of the traditional finance system, which has many shortcomings, but has also some good points, and the new kind of transparency that can be provided by crypto. So I would love to touch on a few of these issues, starting with you, maybe Michela. New crypto guarantees, like the adoption of proof of reserves. Binance has been very vocal also about proof of address, proof of reserves. Still, these have not been widely adopted by the industry, but what is your view on that?
Yeah, absolutely. I think it's proof of reserve is paramount, and as we have always been vocal on this, everything is online. Binance publishes all their statements on our ratios. Our ratio currently is 101. We're the exchange in the world with the biggest amount of reserves at this point in time. Again, it's extremely hard to reach that 101 ratio, but we do have it. And I do agree with some of the statements made in this panel, in which the more wealth managers and TradFi wealth managers jump in the space, the more this topic is going to be crucial. The diversification of custody is also going to be paramount for their operations. I will say, from an exchange point of view, transparency has never been more important. And there are a few exchanges in the world, I can probably count it with my hand, that at the moment are able to open their books. We work with the biggest, and we are in talks with the biggest investment groups out there, and we never say no to providing information they need to operate with us. And that's the number one ethic that any exchange should have. They need any SOC report, security report, it is given. Do you need any due diligence back? It is given. Any information should be granted for the sake of their trust. And again, they need that trust if they're going to jump into the space. And as my colleague Kat was saying diversification is going to be a case. If you want, for example, Binance at the moment, and Kat mentioned a little bit, and that we are very open to more innovative ways to work with traditional asset managers. We have a three-party banking solution in which we work with the biggest banks in Europe at the moment, and possibly we will expand this to other regions. And what we do is just to give those giant asset managers the possibility to still work with their bank of choice, with a bank that they have been trusted for ages, and still trading Binance with an extension of loan and exchange. Now, whether this is going to completely change how custodians or interactions with banks is going to look like, yes, absolutely. And I think it's the first step. We're going to see this solution taking marvelous shapes. This is just a very, very novice solution, but we're going to see this being replicated with some of the probably biggest trading venues out there. Again, extremely positive. The more options you give them in terms of custody, the better. The more we'll be able to allocate and feel certain that their capital is secure.
Michela was just taking you into the conversation, Kat. You already touched in a way on segregation of funds and how relevant is the settlement and clearing facility for reducing counterparty risk. But that goes hand in hand with third-party depository functions like custodian. So would you elaborate on these two issues, the settlement and clearing and the depository custodian part of the financial services that crypto will probably enjoy in the coming months and years?
Well, the thing is that when we started thinking about institutional trading of crypto, we were thinking about old concepts like a need for a clearinghouse for crypto, similar to Euroclear or Clearstream. We were thinking about prime broker solutions which would mirror the existing setups that we have in TradFi. etc., all these tools. But it seems that the blockchain as an innovative tool is actually going to make some of these solutions very much obsolete. And the way institutional trading is set up in TradFi is probably going to be more influenced by crypto than these institutions think at this stage. Take USYC. I'm coming back to our product, the yield-bearing collateral token. So it is available 24/7. It's possible to swap USYC into stablecoins whenever the investors demand. We will be available on all of the crypto venues for trading, lending, and borrowing as a yield-bearing collateral. But then it would make a lot of sense for USYC to get accepted by CME, and then the rest of the traditional exchanges where you have your equities listed, things like that. Because it's a very efficient way to earn yield on your collateral and then move your collateral from one venue to another venue, enjoying all of the benefits that the blockchain brings, so the transparency, the speed. So I can definitely see that a lot of TradFi institutions are investing heavily in blockchain projects to improve their internal operations. In 2020, there was a survey run apparently by economists that mentioned that only 4% of market participants back then were having some sort of R&D blockchain projects in-house. This year's report suggested that 40% of all of the market participants are working on some form of blockchain projects or tokenization projects or sort of R&D in that space. A lot of the TradFi participants are saying that the future is essentially tokenized, and it will be more efficient to trade tokenized versions of equities, private debt, you name it, because blockchain just brings the efficiency and the transparency that we haven't seen in the TradFi world before. So what is going to happen, in my opinion, is not that crypto will resemble TradFi in a few years, but in fact the reverse is going to happen. TradFi will adapt and adopt the technologies that we're building in this industry. However, may I mention something which is somewhat annoying to some of the crypto natives in the room? So whilst you have your TradFi institutions doing the R&D and working on these blockchain projects, so I mentioned HSBC and I mentioned the blockchain called Onyx, at the same time, these TradFi institutions would be blocking transfers of fiat to and from crypto institutions. So HSBC, they were actually taken sort of accountable by the Hong Kong authorities for blocking transfers of fiat to crypto venues. Because the crypto industry cannot exist in isolation. You need fiat rails, and at some point, about 2 years ago or a year ago, you know, with the collapse of Silicon Valley Bank and other institutions, you know, Silvergate signature, all of the issues around the banking sector actually left the crypto industry pretty much debanked. And now we're sort of rebuilding those on-ramp rails. So this is something that Michela mentioned. So we need a more harmonious coexistence between TradFi and crypto. And I would say that we are building towards a future which is more efficient and more transparent.
Thank you. And Chiara, what about custodian diversification? If I'm not wrong, 21Shares adopt some kind of risk minimization through custodian diversification. Would you love to elaborate on that?
Yes, at 21Shares, the topic of custodian is very, very important, and we use multiple custodians, which are banks specializing in digital assets, because of a need for risk diversification. Therefore, we have many wallets. The underlying is held on many wallets at different custodians for this need of a risk diversification. If you have a look to a product sheet of one of our ETPs, for example, Bitcoin, the ticker is ABTC, you will find as custodian Coinbase Custody and Zodia. While if you have a look at Ethereum ETP, the ticker is AETC, you will find as custodian Copper Ltd. So different custodian for different ETPs. Mainly we use Coinbase Custody, which is a different entity separated from Coinbase Exchange, Copper Ltd, which is UK based, King of Trust, Zodia, Bitcoin Swiss AG, and Bank Freak. Anyway, every 6 months, we review our custodians to understand if they still meet our requirements. And at the custodians, we have technologically sophisticated advanced measures, such as whitelisting procedures, cold storage, everything is offline, and multiple private key. And I would like to add that for sure the accounts that 21Shares hold at the custodians are very different from the account that a private investor may have at Coinbase, for example, because they are very similar to prime brokerage accounts, and so we can have special benefits or treatment. And last but not least, we have also substantial insurance that cover every kind of risk, including hacking and slashing about staking.
And Lisa, what kind of guarantees are institutional investors asking from ATP issuers?
As I said before, definitely bankruptcy remote structure, which we keep saying is there. And I explained before that, you know, it's very well described in the prospectus, right? What happens if, unfortunately bankruptcy. And also CoinShares is a bit far away from this assumption because we're also a listed company on NASDAQ. Therefore, we, publicly open our information about balance sheets, cash flow statements, and so on. So there is definitely no risk. And as a guarantee, I will say they really need to understand what is going on. So it's not like a guarantee that they ask for, but I think what they appreciate is players like us coming into the institutions and, giving educational approach and gives them the ability to speak to their clients, so to speak to the bankers, to speak to the team, so they feel a bit safer. And last but not least, I think one of the guarantees that also investors would like to see is that everything is legitimate. So definitely what happened in the past with FTX and some projects that, been in default, shake it a bit. The point of view of investors. So now I will say less is better, quality over quantity, but I think with the regulation and adoption, there has been some, things going into the trash, so to say. But actually, I would appreciate if, Ferdinando, you also say more about your custodian here in Italy.
No, well, I'm not a panelist. Well, I mean, we have been pioneering public proof of reserve since 2020 because we think that, in a way, the crypto can provide a better transparency. And that goes without underlooking or underappreciating traditional guarantees like insurance guarantees or external auditors or SOC attestations, which can add, some kind of even familiar background for institutional investors. But thank you for asking. I'm not a panelist anyway. Okay. So I think we have time enough for one other short round of question and answer. And I would love to focus on markets and asset allocation. We already touched, Michela, on the correlation, diversification, diversified portfolio. But I mean, the global asset under management worldwide, it's much bigger than the current crypto capitalization. Is that pointing to a possible incredible growth or not?
Yeah. I always say that if we see this as a game, we have yet to unlock the best one, right? The best level. And we have yet to unlock the sovereignty wealth funds that are yet to come. In Japan, there is one already looking at jumping to trading crypto exchanges, which is going to be great news in a few weeks and months without disclosing too much. But I do feel that we have trillions to steal on board to the crypto space, but with that last level being unlocked pretty soon, we might see in the next 2 years an extraordinary growth of crypto capitalization. Now, in terms of where are we now, thanks to the last vehicles being approved in Q1 2024, we have done an excellent job, but we are just at the starting point. I do know many crypto portfolio managers saying, why we're not still at X in crypto capitalization? And I say, because it's not going to be immediate. I mean, if you see, and again, history always repeats itself. Go and see the first time that the gold ETF was approved. Where you see the most amount of growth was in the 5 to 6 years after. Go to the charts, the price says it all, the story says it all. What I mean by that is, again, I don't know if this is a matter of our generation, but we want things like this, right?
So the better is still to come.
The better is still to come. It's just zoom out again, and also, if you want to see how traditional markets behave, you go back to how those products are being launched in the past with gold ETF. If you see the charts, there is a very, very realistic time frame of what can we expect for the next 10 years. And with crypto, it's going to be exactly the same. Perhaps my colleagues want to add on?
Yeah.
Can we talk about the gold?
Go for it, Kat. Go for it.
The gold and the Bitcoin. I was astonished and so proud of the work that you've done at 21 Shares, launching a product which combines both gold and Bitcoin exposure in one product. I think that is brilliant.
Chiara, would you elaborate on that?
Yeah. Well, okay. Yeah. I find it super cool, but also, like, if we talk a little bit about indices and baskets, Hashnote offers essentially a product which is called CD20, which offers you exposure to 20 top coins by market cap, which is rebalanced frequently, and it gives away, it takes away the headache of monitoring each individual coin, and it gives you a broad exposure to the top coins by market cap. There is a school of thought, which I actually tend to agree with, that when you invest into a token by some project, you're actually investing into the company, you're investing into their ideas and their growth prospects, because a lot of the projects, they have utility. So Filecoin, for example, is all about file storage, it's about, data storage. So actually, with an index like ours, like the CD20 product, you have already bought a portfolio of potentially uncorrelated assets, uncorrelated sort of proxy investment into sort of like a VC structure, but which is also liquid and with a super low barrier to entry. But since I saw your answer about the Bitcoin and gold.
Chiara, would you elaborate on the product you have that is mixing gold and Bitcoin, and what do you think about this relationship? I mean, gold is at its all-time high, and Bitcoin has been at its all-time high this year, and Ethereum will be at its own all-time high soon. And so what is going on?
Yes, first of all, gold and Bitcoin have an inverse relationship, and as we know, gold is a typical risk-off investment, while Bitcoin is risk-on investment. From a portfolio diversification point of view, it's important to have both Bitcoin and gold. And in traditional portfolio of bonds and equities, 21 shares can offer Bold ETP, which combines, as Kat said, I'm very happy about your interest in this product. Bold combines gold and Bitcoin. Therefore, the investor can have at the same time the four most liquid asset classes for a well-diversified portfolio. We assume that about stock and bond, the investor can get them through ETFs. About gold and Bitcoin, he can get access to both through the Bold ETP, because it combines both asset classes. Bold has been designed to track the performance of gold and Bitcoin by the historical inverse volatility. It was born in April 2022, and the allocation has always been more or less 70%, 75% of gold and 25% of Bitcoin.
Thank you. And so the last question is for you, Lisa. You already mentioned about volatility decreasing in the last few years and months. But is volatility just a risk, or can be also an opportunity?
No, I definitely see it as an opportunity. First of all, yes, volatility will keep decreasing as long as there is less speculation, more adoption, and more liquidity. And there is actually effective tools, as I say, to manage volatility. If you rebalance it quarterly, the volatility goes down massively. Of course, if you don't rebalance, it's going to go like up to 25% and so on. But if you do rebalance in a 40-60 portfolio, we have seen that it goes down to only like 12 or 13%. That's amazing. And Sharpe ratio goes up, right? But there is also another tool that can be used by investors. It's cost dollar average. So instead of buying like in one investment an amount, you buy like little by little, maybe month by month, and that's also helps reduce volatility. So I do think if you use right approach and right tools, it can be seen an opportunity.
Thank you very much. Okay, Kat?
May I just mention a very important point, because this is the second time I am speaking at ETHMilan. I think, Michela, we were on the same panel about institutional adoption exactly at this time last year. And what a change in sentiment. This time last year, we were still experiencing all of the pain and the aftermath of FTX collapse. There was so much uncertainty around regulation. There was so difficult to raise capital if you were running a crypto fund or starting a new project. Well, definitely a huge change, a huge positive change. So at this stage, the total crypto market cap is around $2 trillion, and by 2030, it is expected to rise to $10 trillion. And in my opinion, both the level of adoption of crypto and the price action graphs are both going to look like upwards and to the right.
Oh, and this is a very positive note that we can use to close down, to wrap up this wonderful panel. I will ask for a round of applause to our great panelists.